Holborn, NAMIC's Insurance Uncovered sponsor, is also sponsoring a new book that captures some of the important history that shaped the global reinsurance industry and is also intended to serve as an educational resource for generations of risk professionals to come. On today's Unscripted, NAMIC CEO Neil Alldredge talks with Holborn Chairman of the Board and CEO Frank Harrison about the new book, Beat the Clock: How the Property Catastrophe Underwriting Cycle Works.
Joining me today on the podcast, we have Holborn's Chairman of the Board and CEO, Frank Harrison. Frank, a known commodity to many of our listeners, and certainly Holborn is. What you may not know is that Holborn has recently produced a new book that's called Beat the Clock: How the Property Catastrophe Underwriting Cycle Works, which is certainly something we're all dealing with right now in the industry. It's an educational resource for risk professionals. It also captures some of the history of the global reinsurance industry. And Frank is a known veteran. We were just chatting. Frank has attended every NAMIC convention since 1985, a feat that probably is not held by many right now. So Frank, thanks for joining me today.
Well, thanks, Neil. Really appreciate the opportunity. Thanks for having me.
Of course. So let's talk about the book. So first of all, you produced this book on the first kind of 100 years of Holborn, sort of a bit of an anniversary commemoration of the book. So tell us a little bit about the creation of the book and why you decided to do it.
Yeah, it's really an interesting story. So for starters, Paul Ingrey, and we'll talk more about him as we go, but he had graciously agreed to speak to a group of our younger staff, and the subject at the time was a review of contract wordings in reinsurance. I listened in, and I was completely fascinated to hear his explanation about really how important it was at first to understand the history of how we have gotten to where we are today in the industry. And his stories captivated me, quite frankly. And I told him as he was talking that somehow we need to document the stories you're telling our people right now. We had recently completed our own centennial history, as you mentioned. The authors who helped us compile our book are these British correspondents named Wyn Jenkins and Gary Booth, and they're absolutely brilliant in their capability of creating a story. And in our own centennial, they interviewed a number of past employees, current employees, clients, reinsurers, and I thought they had done an outstanding job. So we commissioned them to basically, and Paul agreed, talk to Paul, document his story, and one thing led to another, and we produced a book. And importantly, the book we're producing here, and I really want to stress the importance of this, we've not done this for any Holborn marketing purpose. We feel quite strongly that the book is a historical document. You mentioned it's an educational resource, and we want to be good corporate citizens. So we're making this book available to anyone and everyone in the industry and at any level. We're certainly going to require our new employees to read it as part of their onboarding here at Holborn. But we tried to produce it in a way that's fun, very easy to read, digestible. It's only 72 pages, but it tells quite a compelling story, and I would encourage any insurance or reinsurance professional to take the couple hours is all it would take to read it.
Yeah, I agree. I've read through it myself, and I'm gonna actually implement it here at NAMIC as well as a good way for people to learn more about some of the history. So tell us a little bit about, obviously insurance, clearly history matters, right? I mean, what it tells us about risk, historically speaking, matters. But why do we think that, what first of all, your relationship with Paul Ingrey to begin with, and then also, why does Holborn feel so strongly that learning about the history of risk is important here?
Well, let me talk about our relationship with Paul first. He is a class act and a gentleman. I'd consider him an old friend. He's now retired, but he's probably among the most decorated reinsurance executives that have ever existed. We first met when he was running a company at the time that was known as F&G Re. They were considered among the very best in the United States. I think a lot of people would argue that Paul Ingrey may be the single best reinsurance underwriting talent that has ever been produced by the United States, and we've known him for decades, and we've traded with him for decades. The bio on Paul and the others who contributed, they're contained in the book, so I won't belabor that now. But Paul is just an incredible person, and we're just so happy that he took the time to do this. In terms of why we feel it's so important to document the history, I was reminded of the saying that those that fail to learn from history are doomed to repeat it. I don't know who originated that statement, but I understand Winston Churchill in 1948 used that in a speech in the British House of Commons, and we think it's true. And so we feel very, very strongly, especially with our younger generation and even people we may hire in the future, that they really have an appreciation for how risk has been transferred over prior generations. There are a lot of lessons to be learned, and it seems to me very few in the industry have taken the time to document it. So here at Holborn, he said, you know what, we're going to call a timeout and we're going to document it, and then we'll make it available to those in the industry. But again, there are some lessons from various hard and soft market cycles and from prior cat events and the like that are important to understand, because they're the underpinnings of the way the risk is transferred today, the way that business is modeled today. There's just a series of lessons that to be learned, and it all starts with history and knowing how it all unfolded before.
Yeah, it's an interesting discussion, and we'll talk a little bit about some of the areas from the book, the Ingres clock kind of analogy, and trying to think about the insurance risk cycle as a clock, and where are we in the timing of the clock? Are we at noon or 1 or whatever the case may be? And you can kind of expand on that. But one of the questions I get asked a lot, and I don't know, this is not something we've talked about specifically, but I'd be curious on your thoughts and how it fits into the book here, is I get asked whether the market dynamics we're facing as an industry now, is this just another underwriting cycle? Or is this is there a shift that has occurred with risk changing, storms changing, inflationary pressures? Is this another cycle, or is this different now? I'd just be curious on your thoughts on that.
They're all a little bit different, but in my simple way of thinking, people may disagree with me, but I think this is yet another underwriting cycle. And we are probably close to high noon. So the clock you mentioned, this is Paul's genius. I'm going to just read something that describes the clock from the book to start, and then talk about it a little bit. It says, Ingres' clock eloquently describes pricing conditions guiding risk appetite for hours 1 through 12, offering logic and reasons why they should be such. He has 1 o'clock denoting the beginning of a softening market, and 12 o'clock the high noon of a hard market. Each hour in between represents a specific moment in the industry's transient conditions. Now, when I talked to Paul, and he talked about the genesis of the clock, he said, Frank, one of the reasons I created the clock is I needed an easy way to explain to investors the great opportunities at hand as we were entering the hard market. Paul Ingres is the epitome of an opportunistic underwriter. He will write considerably more business in hard market conditions and then pull back his horns, keep his relationships, but pull back his horns during softer cycles. And the real interesting observation for me is, any of your listeners will likely know that at January 1, 2023, we were in an extremely hard market. Pricing was, and I'm talking about reinsurance specifically, property catastrophe reinsurance very specifically, pricing was up substantially. Coverages were being restricted. Ceding companies or client companies' retentions were increased massively. The embedded margins in the business at that time were, the likes of which we probably hadn't seen in a generation. You probably have to go back to 1993 following Hurricane Andrew to see anything similar. And we saw fear completely dominating the marketplace at that time. And quite frankly, here at Holborn, and I think it's true with my competitor brokers, we fell short of 100% on some number of placements. We just couldn't find the capacity despite the favorable conditions. We did not see an incidence of new startups or new capital coming into the industry at that time, again, as a result of the fear. And I looked at it and talked to Paul during this period of time, and what a shame, what a tragedy, because I think Paul's underwriting clock was badly needed then. And if investors were brave enough to jump into the pond at January 1, 2023, they would have been rewarded handsomely. So there's a great deal of validity to his clock that he produced many, many, many years ago, and it still applies to this very day. And finally, on your comment, where are we? I think we're about that high noon right now. We are not entering a soft market just yet, but capacity is plentiful, it's available. But I think we are still near cyclical highs in terms of pricing. Pricing will come off at 1/125 by varying degrees depending on individual insurance company performance. But relative to history, we are still near cyclical highs, but heading toward a soft market cycle coming up again.
Well, it's certainly interesting, and we get this question a lot. We describe, you guys have heard us talk about this. I think we even talked about it when I was out there last, as the circumstances of litigation abuse and inflationary pressures and risk profiles changing and weather patterns changing as this new era of risk. And one of the areas in the book talks through, the various other historical events, the events of 9/11, the financial crisis. We talk about those too. I always simplify these things, and those areas of peril in the insurance industry had a trigger, right? There was a thing that happened that caused the market conditions to change, and at the moment, it's like we have multiple things changing, affecting the market at the same time. But talk through some of the lessons. I know part of this is the lesson in the book. It's almost set up as a parable of man plans and God laughs, story lesson from the book. So talk us through that.
Yeah, it's a great topic. So again, I've been at this since the mid 1980s. So I've lived through the different cycles and I've seen the big events. And I guess it was in 2021, I decided to sit down and draft a white paper right after a Texas freeze loss. I don't know if people still remember that. And at that time, it was the largest winter storm in U.S. history and by a considerable margin. And it struck me that the freeze in Texas wasn't the main driver of the loss, although it sounds kind of an odd thing to say, because Texas had seen similar temperatures before and not had nearly the same outcome in terms of loss. Maybe this freeze lasted a little bit longer, but at the end of the day, it turned out it was the power outage and the extended power outage that caused the loss. And because it stayed so cold for so long, because the power was out, there was a lot of water intrusion losses as a result of bursting pipes and food spoilage and the like. But at the end of the day, we start thinking about, well, what caused the power outage? And I'm not here to debate the right versus wrong of public policy issues, but there was a lot of concern over whether the wind farms were winterized properly and whether the incentives of the energy companies were such that they should have taken precautions to have proper winterization so they could have gotten the power back on sooner. And had they done, obviously the losses would have been mitigated to a very large extent. Anyway, that had me then reflect back on, all the big events, the ones that really ring the bell and alter the industry. And so I wrote a paper about the sheer size of Andrew, which at the time was just incredible. It was considerably larger than any modeler had ever envisioned. That was shocking point number one. But shocking point number two was, my God, it hit Homestead, Florida, 40 miles south of Miami. What would have happened to the industry had it been 40 miles to the north and hit Miami head on? I'm not sure we would have had an industry. And, things like the Northridge earthquake, that occurred on a previously unknown fault. Nobody, it wasn't in the model, a blind thrust fault, I think it was called at the time, and, shocked the industry. the tragic one, and it's right here in our backyard. I don't want to talk about it too much because I'll get too depressed, but 9/11, but just purely from a business point of view. So here we have, human-made terror. And we can debate whether when you get into violent acts of terror, whether there's legitimately an insurable interest or not. I tend to think not. When you have bad actors trying to do harm to people, I think all bets are off from an insurance point of view. But the point in this case is the industry had never envisioned, they called it the clash of losses, meaning life, health, aviation, property, liability, workers' compensation, all wrapped up in a single event. Clearly nobody conceived of it, let alone attempted to model it. And it goes on. We went through a period in Florida in 2004. There were 4 major events. I think they were called Charlie, Jean, Ivan, and Francis, if I'm recalling correctly, and followed in 2005 with Katrina, Rita, and Wilma. So suddenly, the prevailing wisdom back then was these major events don't cluster, but they sure did in 04 and 05. They clustered. And so I wrote about all these things, and the point being, and the point I wanted to get across is ultimate net loss insurance, reinsurance rather, I should say, is far and away the best form of protection for an insurance company versus trying to do some kind of parametric deal or swap or something that might create basis risk to the insurer. In other words, these tail events in the loss curve, these events are so infrequent, we will never have enough data points to model them accurately because invariably something will occur that we just could not anticipate before. And, the result of that is ours is a great industry because you form trust-based relationships between the insurance company client, the broker who works on their behalf, and the reinsurers who reinsure them. And when those trust-based relationships are sound and secure, you can work through these issues over time. And that's one of the biggest lessons that I fear gets forgotten. Our industry and where we play, in my personal view, can never be commoditized. It's never going to be replaced by artificial intelligence. These are going to be consenting adults doing deals together, understanding and transferring risk. And, I could go through countless examples where the loss heretofore had not been anticipated and in many cases unmodeled. Yet the industry is so resilient, and particularly for those insurance companies who maintain these trust-based relationships with their reinsurers, they've come out on top.
Yeah, indeed. Well, it's a great perspective, Frank. And I mean, the book kind of captures, you're describing a lot of the essence of the book as well. But if you could point back to the book and if you could point out like one lesson that maybe you just described it, but what would you describe as the biggest lesson coming out of the book?
I think the biggest lesson above all, here's the deal, and it's a very optimistic view. I would never bet against the global insurance or reinsurance industry. It is incredible how resilient the industry is. It's amazing how battle tested it has been and we get knocked down, and we have, but it's amazing how quickly we can get back up and restore the capital and come up with innovative products. And the analytics, the way they continue to evolve and advance, you see it. And so I think we ended the book on an optimistic note about, long after I'm gone and my generation is gone, we have 110% confidence that the future generations to come will be even more innovative and will be able to find ways to attract capital to the industry and to transfer risk on the appropriate basis from the insurers to the reinsurers and spread that risk around the globe, all for the benefit of society. They'll have their own challenges. They're going to face new issues. But I think one of the keys is education. And one of those keys is you better know your history and getting in there. And that's why we did the book.
That's great. And just listen, thank you for your leadership here. Thanks to Holborn. How do people get the book? If they want to get a copy of it, how do they get it?
Yeah, so very simple. I think if you go on our website, www.holborn.com, hit contact us, hit that little section, and just put your information and say you'd like a copy of the book. We'll get it to you. No
Great.
problems. And I can just tell you this. It's not intimidating. It's an easy to read, very digestible, filled with pictures and graphs. And we wanted to make this so it's kind of almost fun to read.
Yeah, it's a lot of people may not think reading about insurance is fun, but this one's pretty good and pretty informative and really great historical context. So thank you, Frank, for your leadership on this. It's a great legacy. And you've been a real leader for the industry for many years. And thanks, Holborn, broadly speaking, for your relationship with NAMIC. You're one of our most important partners, broadly speaking, and great relationship between the two organizations. I know will continue. So thank you for that.
No, thank you, Neil. And I'd echo that and just say, long may it continue.
And that's all for this week's episode of Insurance Uncovered. Thank you to Holborn for sponsoring this episode. We'll be back in January with more insurance news. Until then, I'm Justin Hakes. Have a happy holiday season.